second, you guys. Sorry about that. Okay, got it. And it seems like YouTube is now queuing up. All right, so while that's queuing up, let me keep going. So there's a term I want you guys to use. Okay, that's cool. Well, hopefully it's queued up for them. Okay, I don't know. Anyway, I turned it on for them. If they can see me, hopefully they can. If not, ain't nothing I can do about that. Anyway, let's move on. So here's a term I want you guys to write down and take this to heart. Take this to heart. We have a lot to cover, but I want to help you with a couple of things before we get started. Okay, a couple of things. So write down the word self-esteem. Self-esteem. Write this down. Okay. Critically important for Forex traders. And no, you will never hear this on any YouTube video ever from any trader because they never cover this stuff. But for you guys who are struggling with in other areas of your life, and then you come into the Forex market hoping that the Forex market will be your ultimate savior, which it can be. It can. But most people still don't get it because of their desperation and their needs in their personal life. And so when you come into this Forex market, especially like what I call this week, I call this hell week. I call this hell week. It's so much news, events, and stuff like that. You've seen the market just, the JPY pairs just spike like crazy because the Fed, their interest rate news came out and it was wild. Basically, they're not changing their interest rates. And so they're still one of the only countries in the world who hasn't raised their interest rates since COVID. And therefore, their currency is just complete trash, which is why you've seen it shoot up unlimited. It went crazy. Okay. More news is coming out today. ADP numbers should have came out just a little while ago, but then you're looking for Fed interest rate news this week, and it's just interest rate news, this, that, and the other. So my point is sometimes you're going to lose trades that it really have nothing to do with you personally, but it feels personal. If you know what I'm talking about, type of 10. And the reason why I'm always asking you guys to type a number is because I want to make sure that I'm connecting with you and that you're connected with me and that you completely understand exactly what I'm telling you. Okay. If you're brand new, you want to be very grateful that you're attending these classes. But some of this stuff that's being discussed in here, you can scour the internet all day long. You can scour YouTube. You can go to your favorite YouTube channel. I guarantee they never mention this to you. So yes, as a company, I have turned down a lot of business over the years. And it's not good business sense, but I can't put dollars over God's people, because I know what's going to happen. Your mind is not right. Because in this game, this is a zero-sum game. It cares less about your personal circumstances. They don't care whether you're sick, decrepit, alive and happy, whether you're going through a divorce, a breakup. It doesn't care whether you can or cannot pay your rent. It doesn't care whether your lights are turned on. It does not care. It is a financial engine that is simply every time you participate, either you're going to take their money or they're going to take yours. It is just as raw and uncut and simple as that. All emotions are stripped away on their side, but not on yours. So when a person is telling me that they're going through too much, I don't want them coming into this arena, because you have to have a clear mind of detachment and be ready for battle. And sometimes you win, sometimes you lose. So what? Move on. Some will work out, some won't. So what? Move on. Some will, some won't. So what? Move on. You just simply got to move on to the next trade. And sometimes, yes, it requires you to go back and study because maybe you missed something. As far as many of my students do, they so quick to just rush through. And we got something the other day and it irked the life out of me. Oh my God, it irks me. Oh my God. I cannot stand when we're getting 20 emails from a person simply because they didn't take the time to even go through the tutorials to even look at how to download and install the system correctly. But you'll take the time to sit there and do 20 emails versus taking just a few moments of looking at a video to see how to do it right. That irks me under my skin because it tells me you're not serious. And if you're going to come in here, you need to be serious because this game of money is serious. Now, I'm trying to show you the easiest ways to do it, which we're going to cover today, but you have to do your part. And if you're too lazy to do your part, then just don't do it at all. Don't come in here. Don't buy nothing from me. Don't bother with us. Move on to somebody who's going to deal with your lazy behind. Because the moment you start losing, who's going to get blamed? Me. And then internally, you're blaming yourself as well. I'm a failure. I'm a this. See, notice the terms that's being used. It's no longer about the trade. It's about you personally. See, it's always somebody trying to rip me off. Oh, these things don't work out for who? Me. And see, it's all about the universe of you. And where did that come from? Self-esteem. So again, write down this word and I'm going to give it to you, the understanding of it. Okay. Number one, here it is. Self-esteem, if you flip it backwards, and it will say esteeming one's self. In other words, what is your estimated value of you? Outside of what your mama, daddy said, outside of who called you stupid and you ain't no good and you black and you white, you this, you that, whatever terms that eroded your self-confidence, when you strip all of that away and you stare in the mirror, what is your estimated value of yourself? If I was to take my ring in, it's a white gold ring with diamonds. I can take it into a jeweler and they will give it the once over, and then they will send me back a report and say, here is its estimated value based on market of what the market can offer. Very cut and clear. Are you guys with me so far? Type a 20 in the box if you're with me so far. I'll make sure you guys are getting this. If I want to sell my house today, I bring in an appraiser. They're going to go and do a market analysis, see what the most recent homes in the area sold for, and this and that and this, and they will give me a cut, clear report and say, Mr. Uncle P, here's the estimated value of what you can sell your home for. See, cut and clear. Problem is, some of you guys have been through so much, you are actually more valuable than you think you are. But because it's you giving your own self an evaluation specifically off of what other people say about you, your estimated value is cheap. This is why you're mistreating your body. Smoking and drinking and weeding heading and cussing and fussing and fighting and shaking your Rumpelstiltskin. A person of high estimated value don't treat themselves that way. But because of your psychological perspective of you, you are undervaluing your value. That's equivalent to me saying, okay, my house, and let's just say it's worth $600,000. But in my perception, I'm going to sell it for $200,000. And yes, I get a ton of offers. So I'm like, oh, okay, yeah, my house is worth that $200,000. No, you're getting so many offers because they're like, is this person completely stupid? You got a house by water and you're selling it for $200,000 when it's worth $600,000? So I get all these likes. That's what we can convert it to. Offers on my property or in social media. I'm getting all these likes. So that must mean that this is where my value is. No. You're getting attention because they think you got to be stupid. And then you bring this mentality into the Forex market, expecting the Forex market to save you. And in essence, it's ruthless because it's not an emotional game. And so every time you lose, you take it personal. Type of 45, not you, but if you know some traders who I'm speaking to who this really fits. Come on, talk to me. We tell truth in here. We tell the truth. I undervalued myself. When I entered into this Forex game, it was at a very, very bad time in my life. I was going through what I call my Job experience. That's when I started trying to do this out of desperation. I know what I'm talking about. I'm not putting you down. I'm just telling you how it is. It was the wrong time for me to actually have entered in. I shouldn't have gotten in myself during that time. I was going through too much. I was looking for a financial savior. My head wasn't in the game right. I would buy indicators and I wouldn't pay no attention to actually going through the tutorials. I did the same thing because I was in a rush to make this money, to get my financial savior, to make me feel valuable again. But it wasn't the point. It wasn't meant to do that. And until you get your core value in balance, everything around you that you touch, you're going to molest it. And I'm sorry for using that term, but that's what it is. It's a misuse of a product. It was not meant to be used that way. You're abusing yourself. You come in as a gunslinger in the Forex market, over leveraging. You know full well you ain't supposed to do that, but what do? Everything you touching, you misusing it. The person you trying to hook up with, you know they ain't right for you. Why are you with them? Because you don't think you can do better. I'm getting older. This the best it's going to. No, that's not true. That's your estimated value. You're allowing things to happen in your life that shouldn't be allowed because of your estimated value. Your lack of discipline comes from your estimated value. What difference does it make? It makes all the difference if you believe you're valuable enough. And I'm speaking to all of us. Your estimated value is off balance. That's where the word self-esteem comes from. It means to esteem or to lift up one's self. You're not lifting yourself up. Well, I don't want to be prideful. Get that religious stuff up out of your head. It's a difference between being cocky and being self-important. I am valuable to myself and in the eyes of my creator. There's no cockiness in that. So don't make it a religious thing. Oh, I'm just trying to be humble. And then you letting all this foolishness happen in your world. Kids disrespecting you, lover mistreating you. Nobody on the job respects you. And the truth is, you don't love yourself. So you're allowing all this because of your lack of love for you. And you keep asking for someone to love you. Why? You don't love you. And people will love you according to how you're loving yourself. The same level of love you have for yourself is how people will love you. And the more you put standards up, you start drawing more energy of people who have respect for you too. That's not arrogance. It's just I know my value. And most of the time you'll hear from people saying, oh, you think you something. That's typically from people who don't have good self-value themselves. So they try to tear you back down to where they are. And all of this plays out so that when you take a trade and take a hit on that trade, you start losing value again. Because you're like, here we go again. Nothing in my life works for me. So let me close this portion of it and then get straight to business on these charts because we got a lot to cover. Today is going to be a blessing. If you stay, I promise you, you're going to be so glad you did. Okay? You're going to be glad you did. Let me read this to you guys, and then we're gone. We're getting straight into charting business. This one was sent in the email. It's a ministry called Soft Straws in a Small Straws in a Soft Wind by Marsha Burns. And it said, in a dream, I was cleaning out a storage unit and found boxes and boxes of old cassette tapes. Watch this. This is beautiful. In a dream, I was cleaning out a storage unit and found boxes and boxes of old cassette tapes. I built a fire in the fire pit and began to systematically throw them into the fire. About halfway through the project, I started to panic about maybe needing them again and I wouldn't have them. Then I realized that I no longer had a cassette player to listen to them on. I believe the dream symbolized the need to let go of the things of the past that have no meaning or purpose in your present future. Isn't that beautiful? How many times you hanging on to something that don't even work in your present anyway? Let it go. Let it go. If that was helpful, type in number 20 in the box, and then let's move on to the next phase. I got something really, really good for you guys, so I need you to listen up. Shed off all this mental damaging thought processes so that when you go into this Forex market, the remainder of this week and going into next week, you will simply have a professional business mind and stop making all these trades personal, because it's not personal. Let me show you an example. The AUD just had a spike go on. I don't know exactly why, but it did. So it just hopped up and started spiking. See? I don't know what happened, but it just did. See? It just did. It is what it is. It's just the markets. Okay? Why did it do that? I couldn't tell you. I don't know. I don't know. Because I didn't see any specific news for AUD this morning, but something must have came out. And so this is the nature of the beast. Oh, I'm sorry. Let me share my screen. Thank you, guys. You guys are so helpful. Okay. Let me make sure you guys can see what I'm seeing. Yes. Okay, so look what happened. See, this morning, just a little while ago, right before class, AUD spiked up out of the blue. I don't know what news event it was or what's going on, but it just spiked up out of the blue. Just see, look at that. Boom, just spiking. Boom. This is the one I wanted it to spike all the way to the top to retest on this 4 hour. I hope it does retest this 4 hour because I want to hit it. But out of the blue, it just spiked. So while I was talking to you and while we was getting prepared for class, answer me this: what did the AUD have anything to do with me about? Did they acknowledge me? Hey, you're going to be in an AUD trade, and I'm going to take you out. Did it say that, or did it just spike because of some news event? Type. Which one? Just spike. It had nothing to do with me. Had nothing to do with me. And here's the good part. I wasn't in a trade on the AUD when it spiked, so it didn't affect me anyway. You see what I'm saying? It's not personal. It's only personal if I make it personal. And I make it personal oftentimes because I was already feeling some kind of way before I even took the trade. And this is why I'm talking to you guys about this, because sometimes you can go through things and you're already feeling some kind of way personally before you even took the trade. And so if the trade don't work out, you're making a trade about you as well, when in essence, it had nothing to do with you. So if I'm talking to you, you need to scale back and maybe take a week off from trading and get your head together. I can't tell you the number of people who over the years have contacted me and said, Uncle P, because this ain't the first time I said this. And they said, Uncle P, I'm glad you turned me down. Uncle P, I'm glad you told me to just stop. But sometimes I just told them, just stop, take a break. And they was very grateful. They came back later and said, here's what I was going through. And I'm thankful that you told me that. Because I was going through so much and I didn't realize it. And then when they came and got their head cleared and when came back, they was actually profitable. So if you guys want to really have conversations about, trading psychology, trading in the zone and all, those are all good selling books. But to the average person, it really doesn't touch your soul because it doesn't reach into where you really are, which is your level of self-esteem. Okay. We have to work on our estimated value. I see myself as a child of God, and I should be profitable and I should be successful. I will go through trials and tribulations. I will go through storms, but one day I'm going to get there. And I know I can because I have all the tools necessary from Uncle P and his tutelage, but also I'm a child of God. So I was born to be successful. I just have to find my niche, find my footing, and stay with it. And that mindset will get you to where you want to be. But if you're going through so much turmoil right now, it's difficult for you to fight that battle and then come in here and fight in the battles on where they can care less about you in the first place. So for some of you guys, those old cassette tapes, again, they don't sell cassette tape players. Toss it out. Let it go. Time to move on. Today is your first day. Okay. So let's just all agree. Let's start fresh today. Today is your first day, regardless of what life had thrown at you. Historically, this, that, it don't even matter no more. You woke up today and you have a fresh day. So let's all just start fresh today. Everybody agree? If you agree, type a 100 in the box. Oh, and by the way, somebody said Ocean Wave was correct again. Yes, it was on AUD. Look at that spike. See, when it spiked up? Okay. See? All them AUD pairs that went up. Look at that. Ocean Wave. Called it again. All right. Now, with that being said, hear me clearly. Because of the high demand from many people, including this morning, got more contacts. Please, 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 please. I was doing this, that, and the other, and I missed the discount. Now, da, 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 da. Okay. I'm going to do it one more time. Okay. And one more time. If you want the Ocean Wave system, I reactivated the code for the next 48 hours. You got 48 hours. Okay. And I'm being nice because normally I don't do this. If you want the Ocean Wave, you got 48 hours. Use code Nancy and you can get your discount. And please don't hit me up. Well, I just bought it yesterday. I bought it. It just starts this minute. Okay. Because we don't go back in the systems and do refunds. It's not processable. Okay. We're not able to do that. Okay. I'm not doing that. As of this minute, if you want Ocean Wave at the discount, the $50 discount, go get it now, right now. Use code Nancy. Okay. When this is over, please, I'm really going to disregard it because I should be disregarding it now. But because of the number of people who contacted us, I'm going to do it one more time as a favor. Get it while the getting is good. Okay. Everybody clear? If you want it, go get it now. Okay. Code discount is Nancy again. All right. Now, let's get on to something that is killing accounts. Now we're going to get into a couple of things. Then I got this video to play. I want you guys to really hear this. Okay. I want to talk about ambulance chasers. Okay. Here's an ambulance chaser. If you tried to chase the news event that came out on this big spike, yeah, one more again. My mama used to say it like that. One more again. Okay. One more again. You got one more time again. Okay. One more again. Once more. All right. So here's the ambulance chaser. Ambulance chasers, and this is killing accounts and have always been Achilles heel for me as well. Okay. So in here, we do talk as a group, as a whole. Okay. There's nothing wrong with us being open and honest. One of the Achilles heels for me is an ambulance chaser. What I call an ambulance chaser is such as this. When a news event comes out and it's going to happen today, okay? So please, 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 if news comes out from the feds, typically wait 30 minutes, even an hour. Just wait. Just wait, okay? Wait. Because sometimes there's also delayed reactions. And here's where I mean. All right, so the other day, the JPY came out with news and all of these pairs just suddenly started spiking up out of order, okay? See this big old move out of order. It was just wild. It was completely wild, okay? So all these pairs, and I'll use the JPY for an example, which by the way, Simplicity caught it right here off this bounce. So congrats to everybody who caught this move right off this bounce. See right here in the corner. It did a sharp pullback, hit that support, and boom, shot up out of there. So yeah, this would have been an easy trade for you, for those who had it. The Swiss did the same thing. Okay, see right there into that batter's box. Okay, right off the trend line on the 4-hour, and it shot up. So all of them did the same thing. So if you caught that trade right here, it was right here. Okay, this move right here, it was huge. But the problem is, and I'm gonna go back to your USD JPY. Sometimes we catch these news trades and you're trying to catch and you say, okay, here's where it originally should have stopped, right here. When it stalled right here, be like, oh, yeah, this one I'm finna get in. Well, I'm finna get in. I'm finna get in right there, right there. And you would have been, it was a good thought, but look what happened. Did it stop there? Did it stop there? Here's the level. Y'all see this white line? Okay. It didn't stop. It broke through there. It stalled there. Y'all see what I'm saying? And went all the way up for another 92 pips. 92. This is an ambulance chaser. It means that you're trying to chase news events after spikes. And I'm just letting you know, sometimes it will work, which is cool. But sometimes this is where you're going to get burned. Okay. So, and I'm talking to myself because I'm an ambulance chaser. Unfortunately, I'm trying to break that bad habit, being an ambulance chaser. One of the problems with being an ambulance chaser is we're trying to call the limits on the tops and bottoms. Well, how far should you go? Well, I'm seeing that this is the level of support, this level of resistance. What's the one thing that's missing for those who have the sexy simplicity? What's the one thing that has not happened yet? Type. Hey, Donna, get this Jake person out of here, please. Thank you. Yeah, let's get this person out. Thank you. All right. So what's missing out of here, you guys? What's the one thing that's missing? Anybody? What are we missing? Nope, not supporting resistance. Yep, there you go. I seen it. I seen it. Rich, you got it. We don't have an arrow on the 15-minute. We don't have the arrow yet. You guys get what I'm saying? So it's not a legitimate time to jump in until we have a confirmation on the lower time frame saying, yes, this is time for it to start doing what it needs to do. Until we get that confirmation, we need to just stop chasing the ambulances. Are you guys following me? Okay. Don't chase the ambulance. Just, and this, I'm talking to myself because this is one of my bad habits too. We have to wait for a confirmation, an additional confirmation that says, okay, yes, it has exhausted itself, and now is the time to get in. Until we do that, let's leave these ambulance chasing alone. Because I don't know about you, but it's been a killer in my account. It always have. Always have, always have. I can't say always will, but always have been a problem. Okay. Anybody else? Have that been a problem? Type of 20 in the box if this also been a problem for you. Yeah, see? That's why I'm covering these things, because I'm trying to take what we deal with in our private area, in our private homes while we're trading, and we're challenged along the way, and nobody ever talks about these things. So I'm trying to actually bring it to light so that we can all say, you know what? Yeah, this is an issue. And yes, I am dealing with this. So how can we fix this so that we can do our corrections and get back onto the playing field, such as like a football team or a basketball team, where they go into practice, they correct their mistakes, and then they come back and perform better week after week after week. Okay. All right. Yeah, hold on one second. Let me go to Donna. Let me see. Y'all give me 1 second. All right. All right, so we covered ambulance tracers. Next, we're going to play this video. And then after I play this video that's coming up next, I'm going to actually then go through my list. For those who have Ocean Wave, I'm going to go through my list, and then we can go ahead and open up for question and answer period for trade setups. But the truth is, thank you, Donna. So she removed them, everybody. She removed them. So here's the point. I'm going to go through my trade list of the Ocean Wave, but I'm not, hear me good, I am not going to go through the Ocean Wave and the Sexy Simple to try to look for trade setups. The reason why is because the Fed are coming out with news on the interest rates today. So realistically, everybody should either be in minimal trades or you should be sitting quote unquote flat. Flat means that you have no trades open. So there's no need to even go through looking for setups today, potential setups or anything like that, because you shouldn't be in them until after the news event today. This is why I'm talking about the ambulance chasing, because ambulance chasing means you're looking at these big spikes that's taking place. We got another one, Donna. So it means that you have a person or some news events that come out, and then all of a sudden this spike happened, you trying to call the tops or the bottom, and you hop in, and then the thing keeps going and it ends up hitting your stops, when in essence sometimes it's just better, you know what, let me just wait about 30 minutes, wait an hour, see how far this thing want to go, see if it's exhausted. If it still keep going, cool, I wasn't in the trade anyway. But if I'm waiting for my confirmation, chances are I won't be in the trade for no time soon. And this will protect our accounts from these ambulance chasing moves, which again is going to be coming up this afternoon, with depending on what the Feds say. Everybody with me? All right, now, so let's go to this video, because I want you guys to see this, and then this is going to be a big eye opener, hopefully for some of you guys, okay? And it's a short video. All right, here we go.
I'm Stan here from fundingtraders.com. In this video, I'm going to show you and explain to you how I passed the $2 million challenge in 2 phases. And I'm going to show you the difference between institutional type of trading and thinking versus retail. I don't think a lot of videos on the internet actually make this distinction and give you key differences as to how big players look at the markets versus how retail players look at the market. And my trading will show you exactly how I achieved basically passing $2 million challenge with no losses, meaning I pretty much had 99% of accuracy. And I will explain to you how I've achieved that over the span of 4 months. But this is the difference between institutional, one of the key difference between institutional and retail traders. We're patient and disciplined. We're not in a rush, unlike people who are trying to turn their $1,000 into $2 quadrillion, right? So let's jump right in. As you can see here, these are the scrolls on the screen where you can see all my trades past that $2 million challenge in 2 phases. I prefer 2-phase versus 1-phase account challenges, and this is what I actually recommend for more novice traders because it's a little more lenient. Yes, it takes you a little longer, but the rules are better in your favor and can benefit you, stopping you from being too aggressive and give you a little more leniency, so to speak. I recommend, at least for the first timers, to use the 2-step challenge and not to be greedy. So how did I achieve passing all these trades without taking pretty much any stop losses? Well, the reason why I've been able to do that is because you have to understand from institutional point of view, you have to look at the instruments and gauge their volatility. Problem is with retail traders, they all are so myopic and so zoomed in, they don't even realize what they're doing at the end of the day. I'll give you an example. Let's say your euro dollar is trading 1-to-1 at parity, right? And then euro dollar goes from parity 1.00 to 1.05, which is 500 pips. In the world of a Forex trader on a retail floor, 500 pips is probably 5 blown accounts at the end of the day, right? What is the average distance of a retail trader's stop loss? Usually 30 pips, 20 pips, 10 pips, the sniper entry, all that nonsense. But in reality, if you think about it, the euro goes from costing $1 to $0.05, which is 5 cent difference. 5 fucking cents. Do you realize it's only 5 cents? 5 cents, which is 5% move. 5% move ain't shit in reality. It's only a lot of big deal when you are over leveraged. Everybody says don't use so much leverage, don't trade too big, to everything, right? Too myopically zoomed in on a 1 minute chart and trading all that jazz back and forth, back and forth, back and forth. When in reality, the whole move was only 5 cents, right? 5%. So the 5% move, if you're trading zoomed out on higher time frames and using small leverage and small position sizing, you can pretty much get out of your positions even when you're wrong at break even. And most of the time, you will achieve some profitability. Why? Well, because if you actually understand where institutional flow, meaning all the big players, where they're pushing the price toward from the daily, weekly charts, and there's a little blimp, let's say the euro dollar is going from 120 to parity, and in between that move, there are some back and forth, which is the volatility itself. You can withstand the volatility when it goes against you, because if you start with a small enough position size and nothing major fundamentally changes in the picture, you can withstand that heat. You can withstand the heat of 100 pips or 150 pips during the 2-day pullback, and then it resumes the move into the direction of the trend. Now, same scenario on the 1 minute chart. Now the trade goes against you 50 pips, 75 pips, 100 pips, and you're panicking because you're trading on a 1 minute chart. You're trading on a 5 minute chart, right? When I'm trading my instruments with a small position size where I'm risking 0.1%, I understand it's a $2 million account, but you can apply the same thing and do the same thing on a $100,000 account or $200,000 account, which are available on any prop firm, including ours. You can easily do the same performance, just starting small. So understand one major thing, that currencies are designed by design for stability. Because if one currency is going to move 30-40% a day, like Bitcoin, for example, then imagine you're a Toyota corporation. You sold a bunch of cars in a month of October, and then you're repatriating the money back to Japan. So you have to convert dollars. You were selling the car, your Toyotas in the United States, and then you have to convert it back again to bring it back to Japan. If in that span of 1 month span, the currency lost 20, 30, 40% of its value, your conversion rate is asinine, right? You will never make profit if there's no stability in currencies. So by design, the volatility of these instruments called currencies are not designed to be super volatile. They only appear super volatile when you are over leveraged. And that's when you're trading on these 1 minute charts or 5 minute charts, which you can do if you know what you're doing. But in this particular example, I'm just showing you how pretty much took no losses and passed the challenge. Yes, it took me 4 months since June, but so be, no big deal. Right? Point being, if you actually are patient and you understand that the currencies are designed not to be volatile, and you understand where the major flow is going at daily, weekly, where institutional players are pushing markets forwards, what is Federal Reserve doing, what is ECB doing, what is Bank of Japan doing, et cetera, et cetera, et cetera. What's happening with the bond markets, what's happening with the rates, and how it affects all the currency flows, et cetera, et cetera. Once you understand all these basic macroeconomics principles, and then you use technical analysis from daily, weekly charts, and then use 4-hour time frame, you can pretty much not take any loss, or at least get out at break even 90% of the time. Once in a while, you'll have to take a loss because something major will happen, and the trend will turn around, and will go the other way. There's no such thing as no losses whatsoever. But at least you will not be stopped out like a dickhead on every time there's one day it goes up, another day it goes down. And all it did was 50 pips that way, 70 pips that way. And you've done 20 fucking trades. You've generated zero profit, lots of headache, all that action. You're all excited, like you're in a casino. At the end of the day, and all you have to show for it is 20 blown accounts. So not to be a tool for brokerages. And this is, by the way, all this retail nonsense with the stop losses and everything, it's mostly been taught by brokerages for you to trade on 1 minute charts so you can generate fees for them. You understand? Brokerages, they don't care if you're going up or down. They just need you to generate commissions and pay these spreads. That's how they make money, most of them. So they need you to generate. If I take one trade a week and I sit in it for a week, I'm not a very good customer for them because I only pay commission once for that one trade to get in, to get out at the end of the week, and that's it. That's why it took me 4 months to pass the challenge. Meanwhile, somebody took, in that same week, they took 40 trades, and then, what do they have to show for it, right? So if you actually zoom out and understand the brokerages are the ones to tell, oh, you have to put a 10% out there, there's this level here, blah, 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 all the jazz. It's nonsense. No, you don't have to do that. Understand the basic volatility, monthly volatility of an instrument, daily volatility of the instrument, and stay out of these volatility zones. If you actually apply basic mathematics and statistics, you don't need to be part of the 90% who are inside of that zone that are just getting chopped up and killed on a short-term time frame. Understand where the major flow is going and go with that flow and just stay outside these zones of volatility for daily and hourly and 4-hourly volatilities. Okay, stay out of it. Understand where it's going. And again, you're not going to be able to do it first year on the job. You know, you're 16 years old. You just got your driver's license. And I'm showing you what an F1 pilot can do. Obviously, you still have some work to do to get to this level. But this is how it's done. You basically have to understand with a small enough position size, you don't have to, first of all, you don't have to sweat. You're not worried. You understand that the volatility of a particular instrument, particular currency is this much. It's not designed to go up and down 20, 30%. You just have to stay out of that volatility. And if you gauge the market correctly, yeah, your P&L will flow. It's going to go up and down within a day or two. But within a week's time, if you're staying in a position for a week or two, it will go in the direction of the major flow if you're correct with your analysis. And you will at least either get out or break even when it's really bad situation, something happened. Most of the time you will make profit. And that's how what you're gonna see on a lot of the trades that I'm showing.
All right, let me go to the charts and let me show you guys something. This was very eye-opening, so watch this, okay? Let me explain what he's talking about. Let's go to the charts and let's go to the spikes, okay? Here we go. Yes, Steve, just Nancy, all lowercase. All right, let me show you this. So watch this. Let's go to the USD JPY. Okay. From here, and let me use some crosshairs. From here to up to here, it was 158, or you can say 148.767, or you can just say 148.9. Okay. When it made this huge spike from this level, from here to here, which was 281 pips, but in actual money, it went from 148.90 to 151.710. It only moved up about 3 pennies. This is what he's saying. When you understand that if you take it out of how many pips, and you just look at, okay, what is the range that is moving within from a bigger perspective, you'll see they're saying, okay, on a global level, the markets don't count it according to pips. Only Forex traders would call it pips. But on a typical exchange level, so in other words, I remember when we left from the US and we went to Brazil, we had to do a currency exchange because when we wanted some of the local money, we had to convert our dollars into Brazilian dollars. And the same thing happened in Belize. We have Belizean dollars and Mexican pesos and this and that. So there has to be a controlled, there is fluctuations, but it's not that big when you go outside of the Forex arena. Let me give you another example. Let's look at AUD JPY, this spike that just happened. So let's just look at where this spike happened here. Okay. Here it was 94.255. And here it went to 96. So let's just say from 94 to 96. How many pennies is that? 94 to 96. How many pennies is that? It's only 2 pennies. See, on the global market, when they're exchanging currencies, it can't have these big old spikes. So it has to be a controlled substance. But from our perspective, as Forex traders, we're seeing all these candles that spike huge here and there, this and that. And what he's saying is the reason why he had no losses is because he understood to stop using tight stop losses. That was the killer. And he was saying the same thing I've been telling you guys all along. He said this stuff that you guys are doing in the retail space, which is Forex retail traders, is always trying to find where can I use the minimal size stop loss. And that's the reason why you keep getting stopped out. Because yes, these are big spikes, but if you really look at it from a perspective of, oh, it's just only a penny or two on the global markets, and if this is the range that they're trading within, okay, then it makes sense. So looking at this pair, it did spike up one time beyond that, but realistically, here's the zone. And this is what he's saying. Here's the zone. It's in the 96 range, and the low zone was in the 94 range. So this is their range, and you can see it here. See, It came out one time, but then quickly went back in. News pushed it down this far, but it came right back in. So he's saying for them, outside of news events that will push it outside of these ranges, realistically on the global scale, this is all it's doing. It's just, see, so you can see where this thing spiked, but it's still within the range. Are you guys see what I'm saying? So he said for them as institutional traders, they trade outside, they put their stops outside the range because yes, it may go into profit the same day, but sometimes it may just go into profit a couple of days from now. Everybody understand that so far? Because I'm going to show you something and I need this to make sense. Everybody with me? Type a yes if you're with me. Okay. So watch this. I'm going to go to the ocean wave. And this literally happened to me. Okay. I was in the NZD Swiss trade, which, by the way, I'm going to be going into my list of currencies that I like to trade as well. So here we go. And let me pull that out. All right. This happened yesterday. So I was in it. It was cruising. Then all of a sudden, NZD had some news yesterday. And it went up and then it yanked back real hard. Okay, yanked back. Okay, but then after that news event happened, what did it do? It picked right back up and resumed again. So my stop that I had, and this is let me see if I can find something real quick and show you guys something. Let me see. Let me see if I can find something. Just an example trade. And you'll begin to understand why Uncle P keep telling you, hey, use these, put your stop here. Okay. All right, let's just say, and this is not a trade I would get in right now. I really wouldn't. Okay. But let's just say this is a trade I'm going to get in. Okay. So watch this. If I get into this trade. All right. So I'm in this trade. Put my stop up here. Out of the way. Out of the way. Because that's all I want to do. I want to put my stop out of the way. You can put it on the second wave, whatever, but I want mine out of the way, completely out of the way based on what I'm seeing here. So a lot of times I will actually even use the arrow and then I would determine, okay, hey, is that too far? See, that's only 40 pips. That ain't much. I don't want to use that one. I want to use something else. Let me see if I can find something. Ooh, that thing dipped. Okay. No. Let me see. Hold on. This one was feeding good. This one was eating good. See, I don't see anything delicious right now. Ooh, that's a beauty. Okay, here we go. Let's use this one. All right, in CAD. Let's use this one. Okay, let's just say the market is not going to have news and I'm ready to get into a trade. Okay, here is one that I would actually do. All right, here we go. We got an arrow. Candles are still here. Boom. I'm in this trade. Where would I put my stop? First thing I'm going to do is drop it below this arrow. That's 56 of them. Okay. Because I'm seeing, okay, the last time it spiked was here and here. I can see all that. If I want to be even more comfortable, I'll move it back some more. I'm perfectly okay with having much larger stop losses because as price is moving up in my favor, I can always move my stop loss up. Problem is, if a news event comes out and this thing spikes, it typically will come back like it did here. See how it came back, spiked, re-spiked again, and then resumed right back up into the trend. Do you guys see what I'm saying here? Let me open this up so you guys can see this bigger. Let me pull this down. See how it did the news spikes? Spiked below, spiked, and then resumed and went right back up. Everybody seeing this? Type of 20 if you see this. This is exactly what he's talking about. And I have been preaching to you guys forever about stop using these tight butt stop losses. I wanted you to hear from an institutional, we're looking at charts. I wanted you guys to hear from an institutional trader exactly their philosophy on how and why they don't barely lose trades. What I'm trying to do, listen, I want to be very clear. I want to be very clear. I am trying to help us out of this pit that we are in as retail traders, because some of this is self-sabotagement. We're sabotaging ourselves because we won't break free from the philosophies and thinking processes that are actually killing our trades. First of all, we come in with the wrong mentality about ourselves, and then we come in from bad advice that we got off of some dumb YouTube channels. And we keep talking about, oh, I want to beat the market maker and this and that, and this. And we wonder why, statistically, 80 to 90% of retail traders never win. And we don't diagnose why. Why is it like that? That's great to hear that it's that's the problem. Well, it's actually not great to hear if you're a retail trader. For the institutions and the brokers, they love it. But for everybody else, it's not a good thing. But we never diagnose what is causing the sickness in our community of retail traders. And this is part of it. You're constantly putting your stop right where they can target and hit you, because you constantly are being taught, okay, you want to use a tight stop loss, use a tight stop loss. So it's tight. And where's that coming from? His key factor was he used a smaller position and a bigger stop. I'm gonna give you, write this down. Here's the equation before I give you my list of my favorite pairs to trade. And you'll understand why. If you got the ocean, I'm specifically talking about ocean wave. I'm not going to talk much about simplicity today because I want to see some setups. I do see some setups, but I'm not going to even bring them to the surface, because until this news have passed, there's no setups that's even worth taking right now, in my opinion. Not even this one. I'm just using this as an example. Okay. But the problem is that we're constantly doing the wrong thing as a retail group and expecting to get the professional results. We don't study, they do. We don't take our time looking at fundamentals or checking out news before we take trades, they do. We want to use tight stop losses, they don't. We want to scalp the market, as I said in one of my videos this week. You tell me what bank or corporation that you know are scalpers. If I was sitting in a room full of banks and institutions, I've been asked this several times. If I was sitting in a bank full of institutional traders, how many would raise their hand and say, yes, Uncle P, I am a scalper? Type. How many do you think? Yeah, no, I locked it. I locked it. Because we got some crazy nut. So I just locked the meeting. Next time they have to come on time. This is my point. Everybody is in agreement. No, see, when I bring up certain facts, people attack me, but then when I ask certain questions, they can't refute the facts. The fact is, no, if you're talking to banks and institutions who are moving millions of dollars, not a single one of them are scalpers. Now, I will reverse that. If I was sitting in a room full of retail traders, what do you think is the percentage between, let's just say, from 50 to 90% of them? What percentage number would you pick to say that retail traders are scalpers? What would you say? They trade 5 minute, 1 minute, or 15-minute only? Type. What do you think? Masada said 80. Somebody said half and half. Jackson said 75%. Come on. Liz said 100%. Earl said 90%. Come on, keep talking to me. See, do you see where the problem is? So we want institutional results, but we don't want to do what they do. And yet we keep talking about, yeah, the rich keep getting richer and the poor keep getting poor. You have access to this too. So you can't sit there and blame them because they choose to do the right thing and you keep choosing to do the wrong thing. They choose the right process. You keep doing you keep doing, I'm gonna do me. But okay. You see what I'm saying? This is why I don't get into that conversation about, oh, well, the rich is getting rich and the poor keep getting poor. I don't care. I just need to find out what they're doing to get rich and duplicate what they're doing. Why be a hater when you can be the same person? You can be them too. You just got to get out of your bad habits. And one of the biggest ones is they don't use type stop losses. Number two, did you hear what he said? What time frames are they checking out first? Daily, 4 hour. How long have I been saying that? And I'm a 4 hour lover. They check the higher time frames first. I'm not saying you can't trade on those lower time frames, but did you check the higher time frames first to figure out what's going on? Why do you think we built this system with it already pre-built? Because I said, you know what? When I first designed the system, I didn't even have this. But I said, you know what? Wouldn't it be cool for everybody to take one quick glance with their eyes at the bottom to then see what is the directional bias of every time frame possible from the 1 minute all the way to the monthly? That's where the concept came from, because I knew without it, a lot of people were going to screw this up too. So let me build it in so at one glance, you can already see where most of the time frames are. And in this situation, this is what type of trade is this? What type of trade, for those who have this system, what kind of, and went through the tutorials, what kind of trade is this? There you go. Somebody knew right off the top. See, because I studied. It's a half and half. It's a half and half. Uh-oh, something just happened. See? And look at the same. Look at that. See? I'm in the same direction on this half and half. I'm already hitting in profit. See? Go to the 1 hour. See? See? I'm not arguing with the market. Where's my stop? 69 pips. I ain't tripping. 69. I'm cool with 69 pipperoos. See, if you are willing to shrink your lot size and stop being greedy to try to become an overnight wonder, and I'm speaking to all of us, then what happens is you'll be able to open up and comfortably use a much larger stop loss so that even if you took a trade and the news event just came out and this thing starts spiking, typically, it'll spike in your direction, okay? But even if it pulls back on you, like it did here, you can see it pull back, knocked out the tight stop loss people, and then went right back up again. See, you can see it on this one. Same thing. And resume right back up for another 40 pips. Let me enlarge it. See how I pull back? Spike to the main wave, and then took right back off and resumed right back up in that trend when the news event was over. Liz said some news just hit. Okay, see? But which way did it go? Ocean Wave called it. I'm not in the loss. I'm not in the loss. This is my point. What? 69 pips? What? I can hear it now. What? Yeah, that's what they do. That's why they're making money or not. Because they're seeing, okay, this thing is starting to head which way? Which way is this thing starting to head? Which way is it going, you guys? Up or down? Come on, just talk to me. Look at this. Look at the MACD, look at the arrow, and look at where this is going. Which way is this going? Everybody's in the same agreement. We all see how it's a no-brainer. Everybody's in the same agreement. But when it comes to putting the stop loss, everybody's not in the same agreement. Because the first thing everybody else is going to do, they're going to put their stop right, bumper stop, right there. And then if it comes back and hits your behind, like it did here, you see, here's your stop. I'm gonna put a tight stop loss. I'm butt cheek tight. Okay, well, go ahead. Do you? And let me close this out for somebody to try to, I'm gonna take that trade. No, I told you, hold off until after news. I'm just using it as an example. Point is that you put your stop right up under there. But me, I'm going to put it out of the way because I learned this is what they're doing. They're putting their stops out of the way. They don't want it tight, and I don't want it tight either. Why am I shrinking my candles? So I won't get freaked out. by the size of the candles. At the end of the day, I just need to know, are you flowing up or down? Look at this. This was flowing up, then start flowing down. Now it looks like it wants to flow up. This is an agreement, half and half. Okay. If it wasn't for news, yeah, I'll probably stay in that trade, but news is coming out, so I'll wait. Okay. Everybody understand what I'm saying? Type of 65 if you get exactly what I'm saying. This is what's making the difference. We have to sit down and list out what is the difference between the successful traders and the institutional traders. Some of the people who are really doing well on YouTube, who I actually really follow because I know they're really genius, you'll see that they don't use tight stop losses either. There's Jenny and one other person who I know can actually scalp on a professional level. Outside of that, all them YouTube videos, I don't watch them. I got rid of them a long time ago. They get lucky every once in a while, but after a while, guess what? That just a small, like you said. See, listen, if you were in this trade on the JPY and this thing that spiked, okay, and the thing that spiked on you on a smaller time frame, see, this is huge. This would have knocked you out. But on the higher time frame, it's still within range. It's still within range. So as long as you're outside of that range, you'll be okay. Okay, everybody understand what I'm saying? We have to fix our sloppiness. We can't sit there and keep doing the same things week after week, but then hoping for something better to happen. It doesn't matter how many prop firms you pay, no matter how much money you put into a broker account and trying to do a new strategy. If you keep doing the same fundamental stupidity, you're going to keep getting the same fundamental stupid results. You study 50 strategies, but the one thing you never fixed is using tight stop losses. You guys get what I'm saying? Some of this is fixable. Realistically, some of this is really fixable, but we're just not fixing it. And we're thinking a new strategy, a new trading system is going to fix it. This is part of the reason why we have 50 different trading systems and 50 different EAs and 50 different this and that, and nothing changes. Part of this is because of your philosophy on where to put your stop loss. You haven't broken the habit of having a scalper's mentality on a swing trading situation. And until you fix your head, this ain't going to change. Everybody get what I'm saying? Everybody get what I'm saying? I told you I got blamed for so much stuff. Oh, his stuff don't work. His system don't work. Okay, cool. Whatever you want to say, you can blame me all you want, but the truth is you didn't follow directions because that part of you is still dominating everything you touch. Everything you touch gets polluted because the simple things that you are supposed to fix, you're just not fixing them because this is what you want to do, and then you're trying to throw things on top of it. The bottom line is, it's like, and I heard this term, and then we're going to go to my list, and then we'll go to question and answer if you guys have it. If not, we'll be done for today. I heard a person one day decided to cook a beautiful meal, baked potato, steak, sauteed vegetables, creme brulee, desserts, and they served it on top of a trash can, a trash can top. You know, them old trash cans where you had the top, you know, the little metal top. They used that as the serving tray. And they put the food, all that beautiful food, but they put it on that and wonder why the person didn't want it. Are you guys understanding what I'm saying? You cooked all that beautiful food, but instead of using a beautiful plate to put it on, you took the top off of a trash can and put the food on it and served it to the person, and you wonder why they don't want to eat it. And this is what you're doing. You're constantly getting new trading systems, new strategies, new this, new that. You got all these people on YouTube you following with their strategies. And at the end of the day, you're constantly putting all that stuff on top of a nasty trash can top called your philosophy about where to put your stop losses. And you wonder why nothing you do is working. We're constantly over leveraging. You know you ain't supposed to put that much on the trade, but you keep taking every new trading style, every new indicator you get, and you keep putting it on top of tight stop loss, big lot size. Tight stop loss, big lot size. All you have to do is reverse that. Small lot size, bigger stop loss. Small lot size, bigger stop loss. Smaller lot size, bigger stop loss. That one switch in your brain can make all the difference between here and there. Okay, thanks. I will. I'll check that out. Everybody clear on what I'm saying? And I'm speaking to all of us. This is me too. This is why it's dangerous to be a full-time trader, because you ain't got nothing else to do. And you get bored and you start making sloppy decisions. And then you blame the market when it spikes and does what it normally does. And no, it's just you. It's just me. Smaller lot size, bigger stops. Can we make a commitment? This is your homework for this week. All of us. We shall this week, from starting today until next week, and I want you guys to come back and tell me your results of what happened. Smaller lot size, bigger stop loss. Okay, everybody type that, please. Those who are willing to participate, type that, please. And now, then, when we're done with this, I'm going to give you my trading list, the pairs that I like to watch. Okay, please type it. I want to make sure that we are doing this together, because I'm working on this too. Sometimes I get greedy. And it seems like the market knows when Uncle P about to get greedy, and that's the one trade that don't work out. The one I got greedy on. Because it says, oh, you're being inconsistent. Oh, slap you. Smaller lot size, bigger stop loss. Okay. Like he said, it took him 4 months to pass that challenge. 4 months. But he said, I was patient. There wasn't no rush. And he passed a two-phase, $2 million prop firm challenge. And it took him 4 months. You've been at this for how long? All right. Now, let's get to my list and we'll be done. And I'll show you my list and why. Okay. NZDCAD is one that you can put on the list. You can see why. And I'm judging all of these strictly just from a 30-minute time. For an example, would I have gotten in this trade if it wasn't for news coming out later? Is this a trade I personally would be in? 200% yes. This would be one of those. This is what I like. A half and half. MACD is up. Everything is looking gorgeous. Yes, technically I would be in this trade right now. Yes, it would. But what is the bigger reason? Because the small candles. See? Even when there's a news spike like right here, it ain't that big. Now, if I pull this too big, which I still see people doing, see, this is too big. Scares you out. Pull it tight, things are all right. Okay, I'm going to say it again. When this is too big, this is what it looks like. But when you pull it tight, it's all right. And so therefore, I'm not freaked out, because now I can clearly see, I know where you're going. I can clearly see where you're going. And I'm cool with following you. You get what I'm saying? Y'all see this? I can follow. So this would definitely be, so if you have the ocean wave, this would be a trade that I would actually take. So NZDCAD is one of them. Okay. AUD NZD would be another one. Okay. AUD NZD. Next one, Swiss JPY. Okay. Swiss JPY. And I like these as tight and small as possible, because I get to see, okay, how do you flow? Okay. And the only reason this is doing this today in this area acting the way it is here is because of that JPY news. Okay, so here's my list. That doesn't mean you have to trade all of these. It just means this is the ones I look for with the ocean wave that I feel comfortable. Now, this is just my list, and I'm not done. This is just my list. You can always go and use some other ones that you feel comfortable with. Do your thing. I'm just sharing with you my philosophy as to why I like these. And the biggest thing you'll always see in common with these, and you can use the 15-minute time frame, which you can see with a roll way smooth. Look at that. So from here to down to here, that was 230 something pips. So when you see these small candles, it didn't mean it didn't move much. It just means that, hey, it didn't look like it moved much, which is fine with me. Okay. Let me go here. From the 15-minute, I'm gonna hit Control Y, and we're not done. All right, so 1, day 2, 3, 4, 5. So within a 1-week period, which is typical, can I hold this trade for about a week without panicking over it? That's my concept. And as you can see, if I would have held this thing from entry right here to the low was about 200 pips, which, by the way, I would have been taking my profit anyway. Okay, so there you go. That was about 200 pips. Okay. In a week, one trade. Let's go to the next one. EuroCAD is my next one. Do you guys see the small candles? Type 18 if you see these small candles. All of these have the same thing in common. All of them. That's why it's on my list. From here to its peak was 308 pips. Hit Control Y. How many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And this is day 11, and it just hit the neutral zone, so you would have been out in 11 days. Okay, so let's just say you got in right here to the neutral zone. That still would have been 200 pips. Slow, easy money. Slow and easy. Slow and easy. Okay. Let's go to another one. Now, again, you could have already phased out and took some profits and this and that. It's up to you how you want to play it, but I'm just telling you. Okay. Let's go to my next one. GBP NZD. Okay. This one went slow and rhythmic. Right now, it's doing a sideways move, so I'm not touching anything on it right now. But when it does come back around, I like it because it has small candles. And when it does flow, it flows. Right now, it's hitting neutral zone, which is why it's blue. So I'm just simply waiting. Okay, I'm not in any rush. Here's where it is on the 5-minute. Even from the 5-minute, if you want to say, oh, I'm a beard scalper, okay, look at this. 5 minutes, small candles. Okay, but for me, it's not time yet. I'm just waiting. Next one, GBP CAD. Same thing, small candles. See, small candles. Let's take from this one. You would have got in here to where it is now. That's about 100 pips. Okay. Yeah, I'm not looking at that. Like I said, see how it's sitting flat? And this down here, I'm not telling you that I would take it. See, this down here, what is this telling you down here, family? I always check this first. Always. What's this telling me? You got it. You got it. You got it. So, CC, yes, you're correct. It does not match up. Everything ain't matching up. So you're right, sis. Absolutely not. It's just consolidating. And that's because it had that big spike move due to the JPY. So it interrupted its pattern. So I'm just waiting. I wouldn't touch it now. So yes, CC, you did good on that one. So no, that's the reason why I said they're on my list, but this is my watch list. Okay, this is my watch list. So once things do line up the way I like them, I will take them. Okay, good job, CC. Yep, good job, good job. You're doing good, CC. All right, let's go to the next one. G Swiss. Y'all remember I told y'all with the simplicity system, I couldn't stand the Swiss. I couldn't stand it. The Swiss, the CHF was my worst pair. I couldn't stand trading the Swiss. Too sneaky. But however, it flips with the ocean wave. Because when you're looking as a 415 trader trying to trade the 415, the Swiss tends to stay in its pattern for a very long time. So it's hard to catch reversals on it, which is why it was never my favorite pair if I'm trying to be a reversal trader. It's one of my least favorite pairs to trade if I'm trying to trade reversals, tops, bottoms, market makers method, supply and demand zone, support and resistance, bounces off the trend lines. All those are reversal trades. The Swiss is my worst pair. However, when it comes to trend trading, it is my absolute favorite pair in any combination. And you can see why. Look at how small these candles were. This is G Swiss. Look. And it was so slow, so you would be like, dang, when is this thing gonna move? It just sat there and sat there and sat there. But then when it drifted and drifted and drifted. That was a 300 pip drift to the bottom. Now, again, you don't know where the bottom is, so you can always scale out and take profit along the way. But I'm just simply saying, if you were at work and you had this trade, could you take this trade on the Swiss and feel relaxed and not even check your phone? Yes or no? I'm not even thinking about it. I can go to the mall. I can go on vacation. I can go shopping. I can do whatever. I can go swimming. I can go hang at the beach for the day and never even have my phone to check. Look at when it came back around. Look at this. Absolute favorite. At its peak, this was 122 pips. As to the present, you still would have been up 89 pips as the time of we speaking on G Swiss. And that's after this pullback, because it's doing the pullback, and that's on G Swiss. You still would have been up almost 90 pips. NZD Swiss. Y'all know I love it. Love it. I would be in this trade right now, Jesus, if it wasn't for news. Look at this thing, just slow and rhythmic, which, by the way, there was another video that should have came out this morning on YouTube, and it shows, no, it's coming out tomorrow. I got one for tomorrow, and that's a cool 36 pips so far. Okay, 36 pips. Okay, so I'm going to do this just for the sake of argument. I want to show you guys something. What if you had one standard, okay, and you had made 36 pips, and let's just move it up 36 pips. Okay, that's about 400 bucks. Okay, that's about 35, just say $400. Okay, would $400 make a big difference to you? If you took one trade and you just didn't even think about it? Yes? Okay. For those who trade in prop firm accounts, watch this. What if you took that same trade and you did 4 standards on it because you're dealing with a larger account, and this is your only trade? Now, let's move it up 36 pips, roughly. Right there. On your prop firm account, trying to pass a challenge, that's a $1,500, just say $1,600. One trade. And on top of that, it was slow and rhythmic. You never even panicked over it. Would that make a difference? Type, 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 type. Would that make a big difference? How many of these are still going in rhythm and you never even lost? Let's go to the next one. One of my all-time favorites, which if I was a reversal trader, I would hate it. But in this situation, I would love it. USD Swiss. Same thing. Look at this. To its bottom, 145 pips. On the flip side, you could have came back up, and this is where it's at right now. That's another 109 pips. 2 trades. Small candles are king. I've been preaching that for the longest. So if you would have got in here, put your stop below the arrow, that's 76 pips. Did you make your 76? You sure did. Easily. Could you have moved your stop as it was moving up? You sure could have. This is where I was started. But then as this thing was migrating up, okay, each level that it moves up, so when it hit this level here, I could have moved my stop right about here, below this level, 2 levels behind. 2 levels behind. As it kept climbing, there you go. As it climbed some more, there you go. 1 level at a time. It go up some more, next wave. I move my stop, and I can just move my stop following the wave. See? Next level, here it is. This is where my stop would be. Well in the profit. Next level, here it is. So this is why I like the wave pattern, because it also tells you where to put your stop. You can just follow along. Move your stop up. As this thing moves up in waves, so do you move your stop. But initially, you started out of the wave. But it doesn't have to stay there. Just move it up along the way. If this thing is moving up, 1 or 2 waves behind, move your stop. But the thing is, you're in this trade and you're comfortable. The problem is, hold on, let me go through gold. Gold is the next one. Liz. I know Liz, my sister's in the group. Liz, everybody say hi to Liz. Liz, everybody knows she's been with us for a long time. Liz, you know, here you go. Here's gold. Look at this thing. Look at it. Look at this beauty. Absolute gorgeousness. Absolute gorgeousness. Look at that. Look at that. Where's your stop initially? You would have got in here. Stop is right there. As it's moving up, move it by the wave. And let's thin this out so y'all can see it. See, real thin, so you can see the smoothness. Smooth as butter. Move it up, move it up, move it up, 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 up. Now look at where this is. Let's just say if I was in this trade right now, where would I put my stop? Probably right about here, okay? Right about here is where my stop would be. Where did it start? Way back here. That's a 1,200 pip difference. 1,200 pip difference. I started it here and moved it up, just following the wave. You see how many trades you can be in that's comfortable and you can just literally go back to work or go handle your business and you're not even worried about it. So when you say, Uncle P, what's your thought process on how you're choosing them? Can you see the criteria? What do they all have in common? What do they all have in common? Come on, talk to me now. What do they all have in common? You got it. Small candles are king. Let's go to some more. I'm not done. I'm not done. I'm not done. Here we go. See? Indices from the 30-minute perspective. I like the S&P 500. Or you can choose your NAS. Okay? See? Small candles. Small candles. Okay? See that? What if you was in this US 30 that long to the downside? Okay. Again, you want to do proper analysis, but look at that. To the upside, it was smooth. To the downside, it was smooth. Came back down again. Look at that. Smooth. All I'm saying, everything's the same. Okay. Here's some bonuses. USD CAD. Look at that gorgeousness. USD CAD. I'm talking about how to trade. If you're going to get the ocean wave system, yes, it requires you to be patient. And again, you're going to have to flip the switch in your head. I am not a scalper anymore. Okay. Everybody understand what I'm saying? You have to flip the switch and say, okay, I'm no longer a scalper. Can you scalp with the system? Yeah, absolutely. You can. I'm not telling you can't. See, this is from the 1 minute. From the 5 minute. Here it is from the 1 minute, which if you want to scalp, look, you would have did all right. Problem is you're against this. I wouldn't have done it, but it's up to you. Here's gold on the 1 minute. Look at this. It came in beforehand. beforehand. What was the overall trend? Look at this 1 minute time frame. So can you trade and scalp? Yeah. As long as you look at this. Look at this higher time frame. As long as you're in that same direction, it's safe. See how you can glance at the bottom and say, okay, where are the higher time frames going? You can glance right down here and say, okay, I'm gonna take the 1 minute in the same direction as the higher time frames. And look what happened. You would have been highly profitable. So yes, you can trade the 1 minute and 5 minute with this particular system. Any of the other ones, I probably wouldn't. I really wouldn't. But which ones would I choose? Just in case, it's going to always be this list because I know the candles stay small. So even if I'm wrong, I have enough time to switch out and get out of the trade without blowing my account. Let's go to another one. USD, JPY. I like it sometimes. Okay. And let me go to the 1 hour. You'll see this one better. See? Small candles. Sometimes. This doesn't count because this is all coming from that JPY news that just came out. JPY, again, they chose not to raise their interest rates and they're still keeping their... This makes 0 sense to me, by the way. The JPY banks are keeping their interest rates at below 0%. So if you have your money in the JPY banks, you're actually giving away money. Negative rates. That means you put your money and keep it in their savings. They're actually taking money from you. They're not even paying you 0 interest or leaving you flat or put your money in, you get the same amount. You put your money with us, we actually gonna take some of it. 0 rates. That's why that thing crashed so badly. It was a news event, not according to the markets. But the point is that if I do take this same thing, small candles are king. However, I will say this, and then let's move on, and I'm done. The ones that I don't trade a lot is going to be the USD pairs because unless the ocean, except with the ocean wave, that's the only exception. Typically, I stay away from them. Why? Somebody tell me why. Why do I stay away from them? Okay. And this gets to the absolute big piece of the puzzle. You all got it. A lot of news comes out on them. A lot. So when you're going through this list, you can clearly see, oh, I find it clicks. Uncle P, I get it. Number one, the Swiss, which is a trend trading currency pair, barely gets news. The NZDs don't get a lot of news. The AUDs don't get a lot of news. The JPY don't get a lot of news. It did this week, but we already knew that because it was already announced that, hey, they're coming out and we knew it was going to be a problem. But typically it doesn't get a lot of news. Are you guys seeing what I'm saying? So the CAD, it doesn't get a lot of news. So that's the reason why they move so smoothly, because they don't get a lot of news. They're not exposed to the news market all the time. The US dollar and the euro are the 2 most pairs that get so much news. And that's why I don't like trading them all the time. Those are my least ones when it comes to this. But even though they're my least, out of my list that I have, you guys can see why these are my favorite ones to trade. So what I did was, on the actual account that I trade, I went through my trade list right here, and I got rid of a lot of these right here. I got rid of a lot of stuff that I don't want to look at, specifically for the ocean wave. I got rid of them, and I only have just those pairs shown to me so that I don't get itchy-handed and say, well, I don't see nothing yet on my favorite one, so let me just go look at them. And there you go, compromise. And again, why? Because I just got to be in the trade, Uncle P. I just got to be in the trade, and none of these are showing me a setup, so let me go in. Or you so used to being in many trades, and this is a bad habit of me too. You used to be in so many trades at one time until even if one pair is the only one that's showing you a decent setup, it just don't feel right. For an example, if I was to take a trade right now, this would be the only one I feel comfortable taking right now. That one. Put my stop loss over here, below this second wave. Okay, and that is how many pips? 70. See? 70. What? Uncle P, you got 70. Yep, 70 pips. I'm comfortable. 70. Second wave. I put it below the second wave. I can always adjust it later on. But what do I want it comfortably? Can't believe it. Okay, that's why you got the problems. What do we agree? Smaller lot size, bigger stop losses. So we can start trading like the institutions. Ain't that what we agreed upon? How do I, well, let me go to the 1 minute so I can use a 10-pip stop loss. Okay, well, that's cool. Do your thing. Do you. Go ahead. Slightest little news, slightest little thing, it spikes, knocks you out. 5 o'clock, witching hour, which is brokers' times, they always open up them spreads. Boo-boo, you out. You out. All the time. Why? Because you wouldn't change your philosophy. So it don't matter how many trading systems you get. It don't matter how many strategies you learn. It ain't gonna make no difference. Honestly, to be honest, if you want to be honest with some of y'all, some of this stuff I'm teaching y'all, it ain't gonna make a bit of difference. Your results are still gonna be exactly the same as they always been. And I'm sorry to say it, but it's the truth. Why? Because you refuse to change the fundamental small things that could be changed, but you don't want to do it. Because you stuck in your head that this is the way it got to be done. And yet you all agreed that the banks and institutions don't even think that way. And yet you can't make the mental leap to say, you know what, I'm going to stop doing this. I'm going to make a commitment to myself and my family. I'm going to get us out of this hole, and I'm going to fix it by fixing my thinking. And because you won't do it, it don't matter what you buy. You keep blaming the trading systems, you keep blaming scammers and this and that, and the truth is you're the scammer. You scamming you. Because you keep making yourself believe you're going to be successful, but you don't want to get rid of your bad habits. You keep wanting to get drunk every weekend, but so assuming you're never going to get into an accident. It's just a matter of time, fool. Why don't you try, hey, enjoy the weekend, but you ain't got to get completely toasted every weekend and then insist on being the driver. Or if you want to get toasted, stop being the driver. Something got to give if you want to get out of the arena of risk. Type of amen if y'all know I'm telling the truth. And I'm talking to all of us. If this is the only setup, then that's the only one. No, you can't have 3 and 4 right now because the market ain't conducive for it. That's the only one I feel comfortable with. And I'm telling you the truth. If I was to take a trade right now, this would be the one. And I might have to wait a week before it hit target. That's fine. At the end of the day, one trade for $3,000, because that's what you'll make on this trade. If it hits target, you'll make $3 grand, $3,100. Are you okay waiting a week to make $3,000? One trade? Yes or no? Come on, talk to me. Yes or no? You doggone right. Yeah, I'll wait. Ain't in no rush. And I ain't got to watch this thing. One last thing. And then we're done. The other benefit of trading like this is one of the benefits. I can have my, watch, please hear me. Sorry that other people left. They missing a blessing. Here's the biggest blessing of trading just like this. One of the adjustments I had to make in my head is, okay, if I have the MT4 on my phone, here's a completely new philosophy, even for me. New philosophy. Here's what I did. And it was very freeing. I'm going to put the MT4 on my phone, but I will not put my broker's account on it. I'm just going to let it be set up as an alert system only. Therefore, I am not watching the trade day and night because I'm not logged into my personal trading account. So Uncle P, why do you need it? You can go into your settings and set up alerts on your phone from your MT4. Therefore, when I'm in a trade like this, I'm only going to get an alert on one of two things, because you don't have to put your personal broker account in there to get alerts from your MT4. Okay. You put the identity from your home MT4 and have it match up with your phone's MT4, and any trading account or anything that happens, it will send an alert. Okay. So the standard demo account that comes when, as soon as you open up the MT4, you don't even have to put in the broker. It's going to come with a standard blank MT4 account. Okay. The only thing you need to do is set up the alert system, the MQIDs, to make sure it's set up correctly so that you're getting notification on your alerts. Now, here's what happens. There's only two things that you're going to get an alert on. If it hits your stop loss, you'll get an alert. If it hits your take profit, you'll get an alert. You don't even have to have your personal trading account on that MT4. Therefore, if I don't get an alert saying they hit my stop, then I know I ain't got nothing to worry about. If I don't get an alert saying they hit my take profit, then I don't have nothing to worry about. That's the only reason why I need it now. And truth is, do you really need it for that? No, you don't. You know, they keep talking about election interference. You keep doing trade interference. Why? Because you keep staring at it on your phone. And what your phone shows you versus what this is showing you, this is telling you, just leave me alone. I'm good. It may take me a while to get there, but I'm going to get there. But if you see the candlesticks on your phone, it looks like, oh my God, oh my God. Anybody know what I'm talking about here? That ever happened to you? You knew the setup on your computer, but then you left the house and you looked at it on your phone, and because you don't have this setup on your phone, the candlesticks look different. And there you go, tampering with the trade on your phone, but then when you got back to the house, you keep telling yourself, damn, I should have left that thing alone. Lord forgive me for that word, but y'all know what I'm saying? I should have just left it alone. When you're trading with small candles, truth is, you don't really even need the MT4 on your phone. It would actually be beneficial to leave it alone. By the way, we've been talking. Scalpers like to even scalp 10 pips. Aren't we halfway there already? And we just sitting here talking? I just ended this trade a few minutes ago. Ain't we halfway there already? Yes? Am I not right? Because it's running in front of your face. We up 6 pips, 4 more pips, and you know, already scalped the trade. And look how relaxed I am. I ain't even tripping. In standards, that's about what, $600? And by the time we was just sitting here talking, and it's just sliding in there really easy. Just sliding. Small candles are king, baby. Now you understand my list. So nobody has to ask anymore, Uncle P, what's your list and what do you like to look at and why do you look? You hearing the whole philosophy right here. The only key is I have to get out of the scalper's mentality expecting results the same day, because sometimes it may not happen. Number two, I have to get out of the scalping mentality of having these tight stop losses and be comfortable with a much larger stop, so that if news does come and pop it, it'll bounce right back later on, because, hey, news only pulls it back to the main wave sometimes, and then it bounces right back off and keep on going, but it does not break the trend. You have to have very strong news events to break the trend, which is what happened with the JPY. It broke the trend because it was such a big move. Outside of that, normally, no. Now, today, there's going to be a big news event on interest rates, which is why I will not be taking trades until after that news event, because it has the ability to break the trend with big spikes. But outside of that, most news events, they don't. which is why the ocean wave is the most powerful trading system, even if you make a mistake and take news events, such as what happened with the JPY today. Why? Because the news events is just, they may push back, but it cannot break the overall trend. When it's in a trend, it's hard to break it unless it's a reversal. That's what that man was saying. He said the only time he typically will ever see a loss is if the trend itself was reversing, which is where the 415 strategy with the simplicity system comes in, midweek reversals. That's where it comes from. So during midweek, I'm always watching the charts to see if the trend is going to reverse. If it's not going to reverse, then I'm going to ride that thing into the sunset. Everybody understand this? Is all of this making sense? I know we talked a lot, but is this all making sense to you guys? Okay. So now let me go through my list one last time. And this is being recorded for playback, so you can always play this back and just listen. Okay, here we go. AUD, NZD. Now, strange things about AUD, NZD. I also like it on this system here, 415. See, boom, boom, boom. Okay, all right. So AUD, NZD, Swiss, JPY, or CHF. Y'all call it Chief. The Chief. No, it ain't the Kansas City Chiefs. It's the Swiss, CHF. Swiss JPY. So again, AUD, NZD, Swiss JPY, Euro CAD, GBP, NZD, GBP CAD, GBP Swiss, NZD Swiss, USD Swiss. See how many got Swiss? Love the Swiss on this ocean wave. Gold. And you can pick whichever one of your indices you like, the NASDAQ, the S&P 500, or the US 30. I actually like the S&P 500 because it's a basket bigger than the US 30, which is a basket of 30 stocks. And the NAS is real jumpy because it's a tech stock. But the S&P 500 is more consistent because it weighs in 500 companies to balance out its medium where it belongs. Okay, so it doesn't jump as much. It's more consistent. CAD Swiss, USD JPY, and USD CAD. That's my list. Okay. All right. All right. All right, you guys. I think that's it for today. I'm going to close up shop. Again, if you want the Ocean Wave Trade System for the next 48 hours, which I'm going to post a video when I'm done with this, due to high demand, people, please, please, please. I missed the discount. I don't like even doing this because, again, as a company, we actually lose money. We lose money, but it is what it is. There's a lot of people who hit me up. Uncle Pete, please, 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 please. So if you want the Ocean Wave for the next 48 hours, go ahead and grab it. Discount code is Nancy during the checkout, and you'll get $50 off. Okay, if this class was helpful, please type a 500 in the box. Satan tries to attack and tear things up, but we're going to keep it moving, player. Funny thing is, you know what's so funny? When I made the announcement, you know what, I'm going to open this up for all traders to try to help everybody. We ain't had this problem in years. The moment I said that, y'all see what happens? Y'all see what happens? And this is why, some of the reasons why, when I was shooting videos, I would cut my comments off. Because I don't need all this foolishness. The moment you make an announcement, you're going to do something good to bless God's people, of course, attacks come. So don't ever think, oh, this must not be God's will. No, probably it is. It's just Satan doing his thing because he's pissed that you actually are doing God's will, which is to help people. So never stop doing what is in your heart because of negative people. It comes with the territory. You just got to figure it out. But don't let them stop you from doing good for people who really want and need your help. All right, you guys. Yes, I sure will tell Nancy that. She just left. She went to go for a walk, and I'm finna go with her. So anyway, I love y'all. Hopefully this was beneficial, and I will see y'all on the other side next week. Okay? All right. And make sure y'all watch the video I post on tomorrow in YouTube. Okay? All right, y'all. That is it. Peace and hair grease. Miss Donna, thank you.